Hey everyone, glad you're joining because I've got two new picks for you. This is a program where I share stock or Forex picks based on some deep machine learning software. And I just kind of want to show off how well it works. I get over 100 signals a night. I'm just going to share two of them with you. Each day I do this, I just pick two that I think are interesting. I'm going to be keeping track of how they play out so you get an idea of how valuable these signals are. But let me get right to it. I'm going to show you slides that have these picks on it. And here, the first one is this. One is a mid-cap stock, RGTI, and this is long. You're going to buy it at a price of $20.62 or lower. Stop loss of $1.46 from wherever you buy it. I mean, if you get in at 19 and change, you still go $1.46 lower from wherever you get in. See how that works? Your target price is $3.41 higher from wherever you got in. So that's the setup. $1.46 down, $3.41 up. Now that setup is sort of risk one to make two. And because it's that kind of a setup, you can tell exactly what the probabilities are for that particular trade. And I'm going to show you what the probabilities are based on the Edgefinder solution. That's the machine learning software that generated this signal. This particular type of setup is designed to win only about 34% of the time. But the edge on this signal is 9.76. Historically, when the conditions that exist right now for RGTI have existed in the past, it wins 10% more often than randomness would suggest. So it's actually a very strong edge. The other one is Amazon. Amazon is a short. Yeah, that's right. It's put on a short position on Amazon, or, buy a put option if you know how to do that, at $241.78 or higher. Put your stop loss $7.01 higher than that, and your take profit at $7.36 lower than that. I'm going to go over a chart of these here in just a few minutes, but you'll get an idea when you see the charts, kind of what the pattern should look like, and maybe you'll get an idea of why Edgefinder software decided that there was a historical edge that should translate into an edge going forward. Now, I don't want to show these in a vacuum. I want to tell you, we gave out 2 days ago two signals, Newmont Mining and selling short the British pound Japanese yen currency pair. There are the numbers for those. Let me show you the chart, how those trades have transpired since, because it's kind of interesting. The first one, Newmont Mining, it's a gold mining stock, right? Well, on the day we gave it, the 27th, 2 days ago, we said that it needed to dip down a little bit, and then there would be a price around $126 that there would be a statistical edge to buy it on. Well, it gapped up the next day and it's like, didn't get in. But the very next day afterwards, it did. I give these trades about a 48-hour entry window. And so you see today, even though we had this big, ugly red candle, look at where that candle decided to hit bottom and bounce back up. That's right at about 126. So this trade is actually positive, even though Newmont Mining is very negative compared to where it opened today or where it closed the day before. And that doesn't mean this trade's going to win. We never know which trade is going to win. But it's gratifying to me. I see this all too often with the Edgefinder signals. It does a good job of putting an entry point at a place that appears to be strategic so often when you see it play out. So that's the way the Newmont mining trade is. We'll keep track of it. It's still open, and who knows how it's actually going to work out. But it only needs to pop up a little bit tomorrow, hit about 128 and change, and that's it. That will be a winner of a trade. The pound yen pair, which is a short, that's a little different story. We put it out on the 27th, and then by the time we entered, that's where it hit. It went up against the trade, and yet it's coming back down a little bit. Got lots of room before it could get stopped out, and it's got a ways to go before it to take profit. It's going to take several days on that one. Once it closes, both of this one and the Newmont mining one, once it closes, then we'll bring them back and feature the full look at how they played out. Until then, just know both of those trades filled, they're in, and they're acting kind of like what we would expect. And now let me go back to the trade last week. Those trades closed really quickly, and the trades we're on now, they're taking a little longer. Here's AMD. It dropped down, hit the buy zone, and then went right back up, and in just a couple of hours, the trade was over with. The USD JPY, similar. That one hit its target. It was a short. We entered. It went right down 69 pips and then turned and went the opposite direction. So those were trades that hit just right away. The ones we have now, they're going to be a little different. Either way, the software, Edgefinder, finds a statistical advantage. Whenever it gives these trade signals, you're always looking at these that have just an interesting place that historically buyers have come in. These are built on individual stock pricing patterns. In fact, I've got this little video that just sort of goes through. If you haven't seen this before, let me just show you a video of what Edgefinder is and what it does and how it works.
Imagine you had a hard-working, super smart assistant, and you could send them off to search through billions of trading strategies to find the ones that actually work for the stocks you care about. And what if the assistant never complained, but just brought you robust trading solutions you could use within minutes of asking for them? That is exactly what Edgefinder does. See, here's the problem. There are millions of possible ways to trade any stock. Different entry points, different exit strategies, different timing rules. You could spend years testing strategies one by one and never find a profitable approach. Most traders give up before they ever do. However, Edgefinder can do it for you in minutes. Here's how it works. Edgefinder uses a process of machine learning known as genetic algorithms. Think of it like evolution, but for trading strategies. You rapidly sort through trading strategies by comparing one solution against 100 others in each generation. But all of that is in the background. Here's how simple it is to use. Step 1. You pick a stock, ETF, crypto, or Forex pair you want to trade. Step 2. You select the Evolve button and Edgefinder gets to work. It searches through billions of possible trading rules using up to 25 years of historical data to find a trading solution. Step 3. It identifies how well the solution compares to a simple buy and hold approach. Step 4. Next, it tests those strategies on fresh data to make sure they actually work. All of this happens automatically in just a few minutes, and Edgefinder displays a solution for you to evaluate. Once you have looked over the solution, if you like it, you can activate it with one click. Then the real magic happens. 4 hours after the market closes each day, Edgefinder will check to see if the next day would be good for a trade. If so, you'll get a trading alert. Each alert tells you exactly what to do by showing you the entry price, the order type, your stop loss exit, and your profit target. Now here's what's important to understand. Edgefinder is a research tool that finds unique strategies built on patterns so deep that most traders couldn't recognize them by looking at a chart. The number of possible working solutions is astronomically large. Edgefinder is the trading research assistant that can test more strategies in minutes than you could test in years. It also reviews your solutions daily and sends you timely alerts. Subscribe to myedgefinder.com.
That's just a little look at, it's a kind of a teaser video of what Edgefinder can do. I want to show it to you on my screen right now. Just look at what it does. You see, here today, I have 144 trade signals based on solutions that I have evolved from individual stocks. And here's how I do a thing like that. If I come here and I say solutions and evolve, and then I just type in a stock, a particular stock or Forex or even crypto, right? And let's suppose I type in this stock, WRBY, Warby Parker, mid-cap stock, right? And I can correlate this stock with any one of a number of different indexes or ETFs. I'm going to correlate it with MDY, the mid-cap ETF, right? And I can just hit evolve and it'll run off. But I can also create a system based on what I specifically want to do. Like, imagine this. Imagine I want to win 75% of the time or better. Well, that's easy. All I have to do is say risk 3 to make 1. If I risk 3, triple the amount that I could possibly lose, triple the amount compared to what I would make on the typical trade, I will win 75% of the time without trying. Question is whether or not I will make any money. Probably not. I'll probably break even at best. But if I have a system where I can win risk 3 to make 1, so my base is 75%, but I can win 80% of the time, 5% difference, I can make a lot of money from that, especially if I can trade very frequently. So there's a few others, but I'm not going to take the time to go through these. What I want to do here, though, is recognize that it's got seasonality, it's got moving averages, it's got crossovers, it's got continuations, breakouts, reversals, and the correlations. It's got all kinds of categories, over 200 different rule sets that I can build a combination from. That means I have something like over 10 to the 800 possible permutations for a solution, for a trading system. And that sounds crazy complex. It is, but that's why I use this software to do it. Well, this software was invented by a good friend of mine, and he worked with me because he knows how to program, but he didn't know too much about how to trade. The two of us have collaborated together now for about 2.5 years, and we've got this thing refined to an excellent degree. So if I get this all set up and I just click the evolve button, it's going to run off and it's going to start. It's going to load up all the Warby Parker data and look through all of its past available data up until now. I don't think it goes all the way back to the year 2000. Which is one of the reasons I chose it, because it'll go faster than other stocks. And then what it'll do is it'll start looking for solutions that kind of fit what I'm trying to accomplish, right? And if in fact I get a solution that has enough trades to be statistically viable, and it shows both an in-sample and an out-of-sample edge, then it'll automatically save that solution and it'll move on, keep trying to find better. The goal isn't to find the best one out of 10 to the 800 possibilities. That would take more than a lifetime. What I want to do is find one that is tradable, good enough. I mean, the better, the better the better. But if it's good enough and I can find it in a few minutes and I can actually make money trading it, I want to know about it. And so that's kind of the way the system is designed, to just find the best available solution and what its rules are. Now, the rules can be super squirrely. You could have 200 squiggly lines, colored spaghetti lines all over your chart, and you wouldn't be able to read it. These systems are so sophisticated, it takes a computer to keep track of them. Well, rather than me have to learn how to read 200 indicators on a chart, I just turn to this system and say, when's the next signal and what is it? And that's what it does. It sends out these signals like I've been showing you. Buy this, here's your stop, here's your target. And the track record's pretty good. We'll let this thing go and come back and check in on it. But meanwhile, I've got over 150 solutions already built, and then they give me their signals every day. The signal here, one that I'm really excited about, is this little group, 0DTE. I don't know if you've heard about it, but the Mag 7 stocks have now put out options that expire every 2 days, every Monday, Wednesday, and Friday. Soon they'll go to every single day, just like SPY, QQQ, and IWM. And so they're paving the way for 0DTE trading. You can just walk up and make a trade intraday with an option and pay the minimal amount of time value, with the hopes that, hey, if we get a big move during the day, we can capitalize on that. Well, that's kind of hard to do. Option pricing is very sophisticated. The option market makers have been in business longer than you have, and they've got more money at stake. So they know how to price it really well. But what they don't have is a good sense of when there's a particular direction. These trading signals, I've been crafting them and evolving them, and I think I've got something that is actually going to help me make trades intraday. I don't know yet whether they're ready for prime time, but that's one of the things I'm going to be talking about in the days ahead. Let me go back to my slides and show you something there that is really interesting. See, when I take signals like this and I try to trade them, I get this from people like, what would you're just taking little bits. You can't win anything with little bits, right? Well, think about it. The gold miners back in the day, if they went out and they just looked for big chunky nuggets, maybe a few of them would find them, but most of them, they had to sort of pan around and look for little flakes, and they built up the flakes over time. Those who were patient and did that, they actually did okay. The ones that just threw the flakes out and kept looking for nuggets only, they went home disappointed. This track record, this slide shows a track record of the past 3 months of me taking little flakes out of small cap stocks. And I was surprised how well it worked. I knew it would work. I just didn't know how well. It worked really well. We had a 16% edge over the past 3 months. That was enough to take stocks that would normally be part of the Russell 2000 that, on average, the Russell 2000, it was up 3.2% for that 3-month period. This portfolio was up 13.1%. The concept works, I tell you. And so I encourage people to check it out. But, at the same time, I recognize, hey, what is this? It's just another piece of software. Maybe. But maybe it's, in fact, the most sophisticated system for a trader like you. Because if you're a short-term trader like I am, and you don't want to spend all day nailed to the screen. In fact, what you want to do is make a trade, walk away. Come back the next day, 2, 3, see how it did. That's what this system is designed to help you do. And so far, it's working. So far, it's working really well. I have helped people in the past build trading systems. And I have a little story to tell you about one guy who really went and did very, very well. Now, this person, if I gave you his name, you could type it in and Google him, and his picture would come up and a little bit about him, and some of his YouTube videos would come up. This guy's legit. He's a real trader. But years ago, he was an intern in my office at the CMT Association. And he was trading during, working hours. And I walked up to his desk, and he didn't know I was there. And I saw the trading screen, and I thought, this is a trading screen I don't recognize. I trade, on every kind of platform. I I know most all of them, but this one I didn't recognize. And I said to him, "Hey, what's that?" Not thinking about it. And he actually punched a key, and the computer went boss mode, just dark. And he's like, "What? Nothing. What?" I'm like, no, no, no. It's okay. It's okay. I'm a trader. I like trading. I just want to know, what are you trading? And he said, "Oh, I'm trading binary options." So it was Nadex, and I hadn't seen the Nadex platform before. This was 2017, and I just hadn't done anything with them at that time. And so he said, "Oh, binary options." I had in my head this little speech prepared. It was, "Nadex is terrible. And binary options are a scam. You're going to lose all your money." I had that speech prepared. But I've learned to just sort of don't talk, listen when people are talking about their trading. So I said, "Oh, how's that going?" He says, "Well, it's going all right. I took my bar mitzvah money last summer. This was November, and that was $10,000. Now I'm up to $16,000. So I guess it's okay." And I said, "Wait, you have increased your account 60% in 4 months just using binary options? Is that bad?" He was a young guy. He still is, but he was even younger at that time. And I said, That's fine. But I am concerned, what's the possibility of giving that back? What's the possibility of you being able to keep those profits? Sometimes people risk way too much, they make a lot, and then they give it all back, and they don't understand why. So would you be willing to let me kind of coach you a little bit and go through your trading scenarios? And it's like, "Yeah, for sure, we could do that." All right. So once a week, I'm going to meet with you, and I just need you to commit to do everything I ask you to do. It's only trading related stuff. Don't worry. And so he's like, "Sure, sure, I'll do it." I said, "Here's the number one thing. Two things is all I need you to do. Number one, I need you to keep track of every single trade. I need you to tell me, I got in here and I planned to either lose this amount or get out by making that amount. So I need your stop and your target each time." And I said, the other thing I need you to do is to equalize your risk on every trade." He's like, "I can do that." I said, "And by the way, I need to understand, how often do you win your trades?" He's like, "Oh, I win like 80, 90% of the time." Okay, okay. What's your setup? What's your typical risk reward ratio? He says, "Oh, well, when I lose, because it's binary options, I can specify precisely what I'm going to win and what I'm going to lose. And I don't do partials. I put it on, I let it go to the end, to expiration. So when I lose $75 per contract. And when I win $25 per contract. And it's just a matter of how many contracts I buy." I said, "Okay, excellent. So I need you to be sure that you're buying the right amount of each trade, the right amount of contracts, so that you're risking the right amount on each trade, whether it's going to be 1% or 2% or 3%. You got to pick a number and stick with it. Make that the same every time." He's like, "Okay, okay." Because he hadn't been. He'd been all over the place. And I knew that when people do that, that's when they tend to give their profits back. 60%. He had made $6,000 in 4 months off of a $10,000 base. And because sometimes he'd risk 10 contracts, sometimes he'd risk one contract, all over the place. I realized one day, he's going to have a losing streak. And if he happens to be betting a lot of contracts, he's going to give that back in a hurry. So I said, equalize. Whatever your number is, pick it, stay with it, go. He's like, okay, we'll do that. And I said, next week when we get together, I need you to have shown me all of your trades, how you planned them out and risk, equalize the risk. And then I need to hear from you precisely what your win rate was. Because he didn't know precisely. He just sort of thought generally 80 to 90% was going to be the range. He comes back the next week, having made 500 trades, 500 trades, and I'm like, wow, you trade a lot. And he's like, well, they're 5-minute trades. They're literally available every 5 minutes. And so I have lots of opportunity. Okay, I got it. That makes total sense why you have the frequency you do. let's see whether or not you have an edge that can persist. What's your win rate? Because he kept the setup the same. So I knew his win rate should be at least 75%. And if it wasn't, then he needed to stop trading right away because he had lost his edge. He said, my win rate is 79.2%. Wow, 79.2. First off, I'm surprised that you were able to maintain a 4.2% edge over 500 trades. See, 3 to 5% edge trades, they exist in nature. They exist in just random trading. You can find them. It's not hard at all. And I can tell you the math and the philosophy and the data and the stuff that is all behind why it's true that 3 to 5% edges exist. Problem is, most people don't know a 3 to 5% edge when they're looking at it. They don't know. And I'll have to share more about that in future episodes. But for now, let me just say, when I heard him say 4.2, I thought, great. That's right in the middle of the expected natural edge range, which means that whatever edge he's got, it'll probably persist. It's not this fluke that just showed up and went away. The fact that it existed over 500 trades also tells me that it's a persistent edge. Good. Check the box. Number two, he was surprised. That was much lower than he expected. Yeah, that happens. Our minds, we remember the goods and try to sweep the bads under the rug as traders, and so we sort of emphasize, our ego says, yes, I'm this awesome winner, right? But when we look at the data, it's important for us to just be honest and clear about the truth. Well, his truth was pretty good, 4.2% edge, persisting over 500 trades, right? I said, excellent. Okay. Do you think you can keep this up going forward? He says, yes, I do. So he did 2 months. After 2 months, we looked at his data again, and he had the exact same win rate, 79.2%. Isn't that amazing? That was just his edge. Not only persisted, it persisted precisely for what he was doing. And I said, have you equalized your risk? He says, yeah. And that means I've made smaller trades than I'm used to. And so I was thinking to myself, well, if he's made smaller trades, I wonder if he's going to feel disappointed with our coaching because he's probably not going to have made as much. We made 60% last time. I said, but on the other hand, if he's trading well and he's trading confidently, well, let's just see. So what's your balance? And he says, I'm up to 32,000 now. 32,000 in 2 months. In the 2 months I'd worked with him, he had doubled his account. And that was after he had gone up by 60% with a less disciplined approach to his risk management. I love this story. There's more to the story, lots more to the story. I'll have to just tease that out there and tell you more about it later. But this story showed me two things. Number one, a 4% edge can be highly profitable. And two, most people don't realize they have a 4% edge unless they do the work of tracking their trades and going through it, right? Well, Bob, my partner, and I, we built Edgefinder with the idea we're going to do all that hard number crunchy stuff for you. And then we're just going to give you the trades. It's the easy button. Here come the trades. Now, if you want, you can subscribe and get out there and evolve your own solutions. And now you have influence. But if you don't want, you can just take the trades or the solutions we have evolved and are sharing. Not the ones here, the ones that come up in the software. We have a certain number of trades solutions that we just share as part of your subscription. So you can make it real easy, or you can dive in. And the fun thing is, if you get in there and do the evolution, you come up with a solution that literally nobody else has. And even if 2 people evolve the same one, remember, 10 to the 800 possibilities, the chances that 2 people are going to evolve exactly the same solution are virtually nil. So when you evolve the solution in Edgefinder, it's unlike anything anybody ever has. It's not like a pick service where you go in and say, give me your good idea for a trade. They give it to you, and they give it to 10,000 other people as well. And now you got to fight the other 10,000 people to hurry and get the entry, the best entry, before everybody else does. I mean, it's like, who wants to be in a cage match with a bunch of other investors? Why not just be, hey, I've got my own solution that I know works. Well, anyway, I hope that gives you sort of a feel for what we're trying to do with Edgefinder and some of the ideas behind why we built it the way we did. I myself have used it for the past year in a portfolio I've published, and the results of that portfolio is there are 4 different portfolios. 2 of them are up 20%, and the other 2 were up 40% last year. It works. I have proved it to myself. I've even traded it with live money, real money, and gotten the same kind of results. And it's pretty exciting. It works. And it takes a little bit of practice and understanding to make sure you're evolving the solutions and knowing which ones to choose. But that's what I'm here to do. Help you sort of sort through them. We'll be back again on Tuesday, February. What's it going to be? February 2nd. And we'll follow the trades that have been put out there, and we'll give you 2 more picks. We'll see how it all goes. I hope over the time I can convince you to give Edgefinder a try because, well, I think you'll love it. Until next time, take care and trade well.